Let's see what's happening with Tesla's stocks. Just a reminder, over the past few weeks, we've seen a significant increase, literally up by 40%, and now we're in a consolidation phase. I'll also show you how I continue to manage the portfolio, what's happening here, and I'll show a table with all my trades and the logic behind managing positions. Also, I had a rather unprofitable deal, a risky and very serious one, and I'll show you how I dealt with it and the logic behind managing positions. Let's start with Tesla's stock. After the earnings report and some news, the stock rose by 40%. Currently, it's in a sideways movement. Let's look at the volatility and what's happening here. As we can see after the earnings report, volatility decreased and is around 50% for some strikes. It's 43%. Moreover, the longer Tesla stays in this consolidation, the more the volatility will decrease. Let's also look at the volatility smile and what's happening here. So we see that for near strikes, volatility is increasing both upwards and downwards. But in the direction of decrease, in the direction of put options, volatility of course increases significantly. This indicates that put options are much more expensive than call options. This is a normal situation because investors and traders mainly hedge their stocks by buying put options. Therefore, put options are generally more expensive than call options. This is a normal situation. Let's look at historical and implied volatility. Currently, historical volatility is the gray line and implied volatility is the white line. Implied volatility is below its historical values. What does this mean? I always say that trading volatility is easier than trading stocks because nobody can predict stock movements, but volatility movements can be predicted because volatility returns to its historical values. When exactly it will happen, no one can answer that, but you can create a competent position through options that will allow you to earn money correctly. Also, let's look at the volume of options trading. What's happening here? As we can see, the largest volumes are concentrated at levels of $180, $185, and $190. This is regarding call options. And along the put of options, we have the largest volume, which is $180. Because above $180 we can't break through, there's a huge wall of call options. And below we can't break through either, there's a huge wall of put options. And that's where we're stuck, unable to surpass $180, neither upwards nor downwards. But again, as we can see, the walls of volume for call options are much higher, because if we surpass $180, then we need to surpass $185, $190 before we can start growing. So we should expect some movement. Also, I remind you of how market makers work. They need to sell options. Someone buys options and market makers consequently sell options. And to offset their losses, they hedge with their sold options. According to Delta, it's called the Delta neutral strategy. Therefore, if these volumes of options trading are breached, market makers may move the price in one direction or another. Also, let me show you the portfolio. Here's how it looks right now. I remind you that I have 3 strategies for AMC stock, SoFi stock, and Tesla stock. Let me briefly explain the theory of how I manage positions and why I continue to make money on them. I remind you that I sold call options with strikes at $180 and $200. As we can see, the stock rose above $180. Consequently, I could have incurred losses on this stock, but I managed to adjust this position successfully. Let me show you how I managed it. These are all my positions. I would like to draw your attention specifically to Tesla. As we can see, I opened an additional call with a strike of $210. This is an additional hedging call. I paid $14 for it. I immediately record this information in the spreadsheet, plus $14. Consequently, I moved the strike from $180 to $190 and I paid $4 for it. So what do we have at the moment? I slightly adjusted this strategy, this position. I didn't get more deeply involved in the work. I didn't move to a more distant strike, although I could have done this. This stock will not rise this week. Again, if Tesla does not rise above $190, I will make that money. Again, why do I think it won't rise, including? Because of such a huge volume of trading. That is, literally, all this volume is concentrated this week. We see May 10th, that is, weekly options. Consequently, as soon as they end, the situation there may already unfold slightly differently. But at the moment, we have huge walls behind which I am hiding. That is, I use logic. I use options trading volume and just hide behind these unbreakable walls. If these walls are breached, okay, I will continue to manage the portfolio and positions. Therefore, in addition to this, I'm not opening anything yet. Let's summarize the week. Today is May 7th. As of 2024, Tesla stock is currently priced at $180. I am writing this down in the table. Let's see, at the moment I remind you that the experiment was betting $10,000. My main task is to outperform and beat Tesla stocks through smart portfolio management. As I do, you see everything. Absolutely everything is transparent. The table is attached in the description. At any moment, you can come in and check. So initially it was $10,000, and my portfolio is growing by 8%, while Tesla's stocks are falling by 10%. And thus, my outperformance of Tesla's stocks is almost 20%. Here's how it looks. On the graph, as we see, the blue line is my portfolio, the red line is Tesla's stocks. And here's the professionalism, that the blue line steadily grows. While Tesla's stock falls very sharply, then rises again, then falls again. I have a steady growth. I achieve this through smart hedging, through smart management. This is my philosophy, so I'm acting. Let's get back to Tesla's stock. What's happening and what's the forecast? I remind you, I have no idea where the stock will go. I just don't know and can't predict price movements. The most important thing, My task is to properly construct and manage the position. I've already talked about this as much as possible. I think I've shown everything, as detailed as possible. I just don't know how else to explain it in more detail. All positions are absolutely documented. I just don't know how else to explain it more thoroughly. So there, and that's exactly what I do. Let's also take a look at the forecast for mid-June as predicted by the market. The market predicts that the price will range between $175 to $180. If we look at the forecast for August, the price is expected to drop to $175. Again, the market suggests that the stock will likely fall more than rise. Again, this is theory and probability. I trade according to mathematical expectation and the theory of probability. I never argue with the market. I always try to take its opinion into account. If someone says that no, the stock will rise to $350, that I'm wrong. You say I'm not right. But what if the market is not right? That's the most important thing. You might win against the market a couple of times, but in the long run, you'll likely lose to the market. Again, this is my opinion. I always focus on managing positions wisely, show how to do it, and explain. And in principle, it doesn't matter to me. That's the most important thing. I don't care where the stock goes, whether it rises or falls. I'll make money either way. That's the most important thing. Again, I won't be earning quickly. How my strategy looks represented by the blue line. Yes, it's slow, deliberate growth, but it exists. Unlike the roller coaster stocks that go up and down, I prefer the slow and steady approach. It's a slow and steady income. I prefer it over very sharp rises followed by falls, but that's my style. I agree it won't suit everyone, but again, it's comfortable for me. I like it. Also, I understand that there's a lot. Many have already missed the beginning of my experiment with these stocks and can no longer track all the transactions. But I want to say that a completely new experiment will start very soon, where I'll be building positions and a portfolio from scratch. We'll literally have $0 in the account and we'll start from the very beginning. I'll show which stocks I'm buying, why I'm buying them, and what the logic behind my positions is. I'm already preparing a special spreadsheet that will be freely distributed. I'll show how I do what I do, why I choose certain stocks. There will be a lot of interesting things. I guarantee you that we will outperform all indices. Also, I suggest you watch my video about the beginning of this experiment, where I describe the portfolio structure and the principles on which I'll build my portfolio. Check it out for more details. Good luck.